Stephen Hayes from First Sentier Investors. Welcome to the Equities and Growth Assets Symposium.
Thanks, Drew.
As a first question, could you explain the broad opportunity set of the property securities strategy you manage?
Yeah, so the strategy is very broad by geography and actual property type. So the great majority of the real estate types are in the new world economy. So it's logistical, warehousing, data centres, self-storage assets, big exposure to residential assets such as land lease communities, detached housing and apartments for rent, as well as healthcare assets, everything from acute care hospitals to outpatient facilities to medical office buildings to long-term post-acute care facilities, very good risk-adjusted returns in their healthcare sector. As well as varying types of office buildings, retail, shopping centres, that's mainly non-discretionary, sort of supermarket anchor type shopping centres that tend to have very stable cash flows. So the sector is quite diverse by asset type and it's really diverse by geography as well.
And what sort of benefits does it provide to traditional bond and equity heavy portfolios?
Well, there's a couple of factors there. Like I said, the great majority of the real estate sitting in the new world economy, so the themes are very strong. The fundamentals are very strong. If I take, say, our apartment exposures, or our residential exposures, the largest component in our portfolio, right throughout COVID and sitting here today, the occupancies didn't fall below 95% and the rent collections didn't fall below 95%. These are very defensive assets with very secure cash flows that offer an excellent inflationary hedge. So I think, you've got equities, which is more risky, and then you've got bonds, which are very inflated with low interest rates. With regards to real estate, you get the benefit of the growth in these long-term themes with secure cash flows and effectively really good inflationary hedges.
And could you explain how that inflation hedge works in terms of property investments?
Yeah, it's quite topical because that's the presentation for today, but effectively it's got nothing to do with lease structures. CPI increments written into the lease structures, that's almost irrelevant. It comes down to pricing power and these long-term structural themes and societal change and reallocation of capital is occurring across global economies as a consequence. These things are going to cross decades and decades and decades. The real estate sector is just a massive beneficiary of all that. So the great majority of those property types I mentioned have pricing power. They offer a very good inflationary hedge.
And what is the most powerful theme in property this year?
This year? It's hard to say just because we've got a bit of a precipice going on between, changing macroeconomic circumstances with regards to rising interest rates, the withdrawal of quantitative easing programs, coinciding with very, very tight unemployment markets. Employment levels or unemployment rates are down to nearing historically low levels again. Some countries are experiencing some wage inflation coming through. So we've got expectations within that environment of growth improving. The real estate sector is really, really well positioned to benefit from that over the next 12 months. As far as which asset classes will probably, benefit most, it's those with the short lease duration. So I haven't mentioned hotels and resorts, clearly with disruption associated with COVID, short-term disruption, that'll be petering off over time. You'll think as international borders open, those assets will benefit. Housing markets remain strong. That's very good for the rental markets, where we've got lots of exposure. We're expecting those markets to do well. And ironically, with the stronger housing markets and a strong decentralisation theme with regards to the introduction of flexible work arrangements and whatnot, self-storage is actually performing really well as well.
Can you provide a company-specific example of one of those themes?
Well, I thought one really interesting example from our perspective would be actually an Australian REIT called the Goodman Group. They specialise in developing, owning and managing for long-term ownership logistical warehouses, very, very modern facilities that are integral to the efficiencies that occur within supply chains and the upgrades that are needed really right across all elements of the supply chain. So the underlying fundamentals are really, really strong. Effectively, tenant demand is the strongest I've seen in my career, again, right throughout COVID and sitting here today. The occupancy markets are just about full. Market rental growth is very, very strong, and these assets have pricing power. And again, these fundamentals are going to cross decades and decades and decades. And the Goodman Group is really a global leader in this space, with exposures not only in Australia and New Zealand, but up in Hong Kong, in Japan, throughout Europe, UK and Europe, as well as North America, particularly the US, and their focuses in the US is in California and New Jersey, and they're some of the two strongest logistics markets globally. So business is really well positioned. You know, they've grown their earnings right throughout COVID. Their earnings in 22 are up 20%, to give you an idea. Their dividends have also increased over that time. So fundamentals are very strong. I think they'll deliver very good risk-adjusted returns for investors.
Stephen Hayes, thank you.
Thank you, Drew.